Beyond Meat. You know, earlier today I went down to the store and got those Beyond Meat burgers. And to my surprise, they weren't bad. And to be honest, when we look at the numbers, I think most people feel the same way as I do. I mean, Beyond Meat's revenue is growing crazy fast. However, I still don't think this company will be nearly as valuable in the next 10 years as it is today, unless they're able to execute on three main things. Let me explain. See, it's easy to see why investors are excited about Beyond Meat. I mean, its revenue has more than tripled year over year, climbing to $40.2 million. And management forecasts full-year revenue to grow to more than $210 million this year. So it's clear that the alternative meat space is trending up. And to add to Beyond Meat's huge growth, food chains like Burger King, Carl's Jr., A&W, and White Castle are all promoting this meatless trend through their advertisement. For example, last year, A&W Canada made a commercial advertising their Beyond Meat burger. Let's quickly check it out.
That patty is 100% plant-based protein.
No way.
That's a Beyond Meat burger from A&W.
That's insane.
Try the new plant-based Beyond Meat burger at A&W.
Now this commercial right here got over 14 million views on YouTube, and it's the most popular video they've ever released on their channel. So it's clear that people want this product and that their numbers are growing fast. But investors might want to calm down and remember that Beyond Meat does have competition coming. Beyond Meat isn't the only future supplier here. Impossible Foods makes a pretty good burger. Morningstar recently released a plant-based meat. And let's not forget about the food giant Tyson Foods, who said it will begin selling plant-based meat products this fall. So in other words, Beyond Meat will soon be competing with the big boys in an industry with low barriers to entry. This will likely cause plant-based meats to become more commoditized, like beef or corn. Now, Beyond Meat claims that research, development, and innovation represent critical competitive advantages, and it does have patents and other intellectual property that protects its technology and methods. And although these are valuable, it's important to remember that since there's a strong demand for these such products, companies are willing to spend money on scientists and chefs in order to find a way of creating plant-based meats. And I'm quite confident that given the time and money, Tyson, Nestle, Morningstar, and others will find ways of producing plant-based meats that can rival Beyond Meat and Impossible Foods. At the very least, new competition will likely bring down prices and narrow profit margin in the plant-based meat industry, thus putting in question Beyond Meat's valuation. Now, I've heard some of those out there compare Beyond Meat to Tesla, saying things like, Beyond Meat will change the food industry, and it is the Tesla of meat. Now don't get me wrong, they may change the food industry, but this industry has low barriers to entry. It's not like Tesla, which has high barriers to entry. This product can be copied by a large food company quite easily. There's no machine learning, artificial intelligence, or immutable formula that can't be replicated. Assuming they're not acquired, the only way Beyond Meat can survive is if they do these three things. 1. Create a product that rivals the taste of meat. 2. Create a strong brand that is truly loved by customers. And 3. Create a cost-competitive product. They need to be the Coke of plant-based meats. Let me explain. Consumers don't have to drink Coke. There are plenty of knockoff cola brands. But because people like the taste of Coke, the price of Coke, and the brand, they are willing to buy and trust Coke over Joe's Cola. So can Beyond Meat survive and thrive? Well, yes, but only if they're able to create a strong brand, compete on price, and make a product that tastes much closer to meat. I didn't want to get into this company's finances right now because it's likely, since they're a startup, they'll probably get investor capital, and a lot of things can change from quarter to quarter. But personally, I'd rather invest in government bonds than buy Beyond Meat stock, because the odds of Beyond Meat becoming the Coke of plant-based meats in the future is very unlikely. Plus, companies that sell commoditized products with high competition and low barriers to entry tend to have very low profit margins. And I'd argue that consumers and companies will eventually buy from Tyson, Morningstar, and Nestle, as they are bigger companies and will likely make comparable products for less. But at the end of the day, only time will tell. Let me know your thoughts in the comment section below. Do you think I'm crazy? Do you think this company has some crazy future that I'm just not seeing? Or do you agree with me? Also, remember to subscribe and like if you haven't already. And remember, these are just my thoughts on the company. I'm not telling you to buy, sell, or hold anything. Any financial decisions you make are between you and your financial advisors. Thanks for listening, and I'll see you next time. Peace.